Good morning, everyone. Welcome to this very early morning session on the global, on the supply chain Go regional. We know that rising global trade tensions, along with the mushrooming of the regional trade agreements at expense of the marginalization of the WTO, and also disrupting global value chain and forcing multinationals to reconsider their global strategy in boardrooms across the globe. In the meanwhile, the vast and still growing market in large emerging economies like China and India, together with new technologies like 3D printing, are making it more appealing for global companies to manufacture and also products closer to the domestic demand. And also, Western politicians are now demanding more local jobs and local tax from their country's largest multinationals. And all this leads to a sort of the regionalization or reorganization or disruption of the global value chain, which has taken decades to build. So in this context, we have a smaller but very wise and a great panel to discuss and debate on the future of the global value chain. I would like to start the discussion by asking the panel the first question. Do you see this kind of new trend is a short-term reaction to the new variables like trade friction, or is kind of a more fundamental shift that will reshape the global value chain in the long-time horizon? So Noel, you are having business, you are doing business with a lot of multinationals from regions, from continents, and from countries. So you have been discussing and talked with quite some global leaders. And what have you heard in the boardroom across the globe? Is it a short-term or is it a long-term trend?
I believe it's both. I think there are some very long-term shifts that are taking place. Companies do want to shorten their supply chain. They do need to respond to changing business models. The emergence of digital business models are making a fundamental change happen in the supply chains. And I think we conducted a survey recently of 35 different markets. And basically 97% of companies surveyed are looking at changing the nature of their supply chains. 28% of them were because of the emergence of digital business models. 18% of them was to respond to increasing demands around building sustainable supply chains. So I think there are some long-term shifts taking place, and I think we're getting much more regional in the supply chain so that you're closer to your customer. And I think the emergence of consumer markets in Asia, China, and the rest of Asia are forcing people to put their supply chains closer to the consumer markets and their long-term shifts in buying patterns and the underlying markets. But then there's also the tactical changes that are taking place as a consequence of trade tension. Yeah. That is definitely happening as well. But I would put more emphasis on the long-term shifts rather than the short-term tactical changes that are taking place.
Yeah, but if you compare with the short-term trend and the long-term trend, in the short run, do you think which one will take a bigger role?
For me, I think the long-term is the priority focus. Short-term adaptation to manage the trade tensions are definitely taking place. That's happening. But I think we've got to be cognizant of the fact that there is a significant production capacity that is difficult to replicate. And it isn't just about production capacity. It's also about the logistics of getting your goods to and from the market. And the dependability of that logistics chain is as important as the production capacity. So I think shifting production out of China or closer to the US, great in theory, but in practice, the production capacity of China is immense. The logistics capability of China is superb, and it's hard to replicate that anywhere else in the world. So I think you've also got to face reality. China is an extremely efficient and substantial producer, and it's hard to shift that overnight.
Yeah. Thank you for saying that. But now I think that we will define who are the losers and who are the winners because of this kind of the new trend and impact, also especially for the trade tensions. Now we have a very high tariff from China to the United States, which is the 21.5%, which is historically high given the background of the WTO of the reducing the tariff dramatically in the last 2 decades. So I would like to define Daniel and Mike, who is the winner and who is the loser. And Daniel, you are supposed to be the winners because you are based in headquartered in Mexico, and now the Mexico has replaced China to be the #1 exporter to the United States. So are you winner?
It's not as easy as being a winner and a loser. We'll obviously be winners at the end of the day, but we have headquarters in Mexico, but we also have headquarters in Tel Aviv, we have headquarters in Amsterdam, and we have headquarters in Boston, Massachusetts. Let me give you a specific example of how trade plays into winning and losing for a company like our company. So we own the largest fluorspar mine in the world. We own 20% of the world's reserves of fluorspar. 1 out of 5 fluorine atoms is controlled by us. 60% of the fluorspar outside of Mexico, our mine, is in China. But given supply-demand dynamics, China is for China, which means that we effectively control 1 out of 2 fluorine atoms. Let me give you specific examples. We extract fluorspar from our mine in central Mexico. That is valued, let's say, at $1 per unit. We send it to our HF plant in northern Mexico, where we produce product B. We transform it into product B that is worth $5. Then we send it to St. Gabriel, Louisiana, and we transform it into product C, and that is worth $20. If there's a free trade between Mexico and the US, that is relevant. Probably more for the US than for Mexico.
USMCA now, it should be.
Yeah, it should go through, but that is more relevant for the US and for Mexico, but the supply chain doesn't stop there. Then we ship that to the UK, and that is worth $50 per unit. 1, then 5, then 20, then 50. After we produce product C in the UK, then there's 100 million people that every day use that in their asthma inhalers, which enables them to breathe easier, thanks to the mine in Mexico. It depends on the trade conditions between Mexico and the US, yes. Does it depend on the trade conditions between the UK and the rest of the world? Yes. Do we impact the lives of 100 million people every day? Yes.
Yeah.
So it's not about winning or losing, it's about being effective in reacting as quickly as possible in terms of what happens in trade negotiations.
Yeah.
We really are focused on having very efficient, very secure, very reliable supply chains and making them as regional as possible.
Yeah, I think I'm very much impressed of how long is the global value chain, and also according to the academic research, because the global value chain become longer and longer, and we have a much better and higher efficiency. But if this very long global value chain has been disrupted in a way or in another way, so do you see kind of maybe a pressure on your global operation? Or
so we are seeing pressure. Slower trade means slower growth.
Yeah.
Slower growth means slower prosperity. I think the equation is very clear. But we see a very quick way in which we can react to these sort of trade wars. And we're actively looking at changing the unit economics of our supply chain and really focusing our presence from a manufacturing perspective, really leveraging on sort of new technologies. And instead of building billion-dollar plants in Louisiana or billion-dollar plants in Europe, we want to build, and we're starting to build much more smaller plants in different parts of the world and building these regional hubs and these regional supply chains.
yeah, we'll go back to the adaptation of the companies a little later. But before that, Mike, you are supposed to be the loser, because you established the first WOFE in Shanghai back in 1984. And also you are manufacturing allowed in China. But actually you are a winner, I assume.
Well, the trend that you started out highlighting, that is our model. That's our winning model, is to invest in our supply chains close to customers. And while we're a US headquartered company, our model is to be regionally capable to support our customer base. So in China, as you said, we entered in 1984 as a wholly owned multinational, and we grew up with the economy. We invested in building out our businesses here. We brought our technologies, we innovated with customers. We grew in industrial markets, electronics markets. More recently, we've really been seeing strong growth in our healthcare markets. And throughout the 35 years, we've invested in manufacturing close to our customers. It's a very important part of our innovation model. Significant part of our intellectual property is in our manufacturing, what we do, our processes, our capabilities that enable us to differentiate performance for those customers. And so over time, we've ended up where not just China, but it's true in China as well, we manufacture a majority of what we sell. And so it's a regionally self-sufficient, but close to customer, responsive. To your point, when you have long value chains, not only can it be disrupted more easily, it's less efficient. Cycle times are critical in this world, and being close to customers enables you to have a shorter cycle time.
So in your view, that's the kind of shortened global value chain will be more efficient and effective in the long run?
Well, there's a physical part of it, yes. More efficient, shorter cycle time supply chains. Digitizing our supply chains also enables you to shorten your supply chain in terms of reducing the cycle time.
Yeah, but also digitalization means that maybe on the global platform, all the participants can find a way to just get plugged in. It will make the global value chain even longer.
Well, for us, we're a material science company, so we manufacture materials. What we leverage a digitization of our supply chain to do is really to become efficient in what we do throughout the supply chain, from raw materials to finished goods to deliver to our customers. And so we use that to improve rates, to improve yields, improve quality, shorten the cycle time to deliver raw materials, finished goods to our customers. So it's really enabling us. It is not sending digital information, it's enabling us to manage our supply chains more efficiently.
Yeah, we'll dig deeper on the digitalization in a while. Before that, but Daniel and Mike, do you want to respond very quickly that the same question like I posed to Noel, which is do you see it's a long-term trend or it's a short-term kind of reaction? More on long or short-term or long run?
For us, it's fundamental to our model. It's been what we've done for 75 years in international regions. And it served us well. It helps you respond to changes in your local markets as well as the global economy. It's really been a very resilient model for us. It's not 100% typically manufactured in one region because you have certain technologies that you don't need to manufacture everywhere. You can share those, but it's a majority manufactured locally so you can respond. And you have flexibility in that global supply chain to adjust as supply chains change. And they do change, they will continue to change.
Yeah, so you're ahead of the curve. So, Daniel?
What we're seeing is we were looking at data over the last 10 years, and we've seen how the financial flows have decreased in a linear way. Trade flows have decreased in a linear way for us as a company. Information flow have increased in an exponential way. So it's definitely a fundamental phenomenon that will change for the long term. We believe that regional supply chains are going to be more and more critical. I think the good news is that technology can help us decide when and where manufacturing will take place in a much more agile way. And I definitely think, and we believe strongly, that we need to move the discussion from quantity of trade to quality of trade moving forward.
Yeah, very good concept in the direction. And back to Noel, I think that what have you heard from the boardroom of the multinationals, and what have you heard from their adaptations to this kind of long-term fundamental shift of the global value chain and also to the global trade? Especially the role of the technology. But if we look at the digitalization in the world now, and it seems to me that we're going to have a kind of regionalization of the digitalization too. So how do you think about adaptation of the companies, especially taken into consideration of the digitalization in the long run?
I think what companies are doing is they're having to constantly adapt, and they can't wait for political resolution. I remember talking to a mid-sized corporate in the UK about 2.5 years ago, just after the Brexit referendum. And they said, I said, how do you feel about Brexit? And they said, well, I can't control it, I can't do anything about it, I've still got to run my business. I'm going to open up new markets, I'm going to use the digital platforms that's available to me, and I'm just going to run my business, and the politics will get sorted eventually. And I think there's an element of that constantly in supply chain, there's an element of that in managing your businesses. You've got to make the decisions today, you've got to adapt your business, and you can't wait for the bigger picture to be resolved for you. So companies are tremendously adaptable, and they're adapting today to the new circumstances. They're investing heavily in digital. They see it as a massive opportunity to go global cheaper, both as end-user market options, but also in changing their supply chain. So digital is a transformational aspect for all businesses, whatever your industry is, and business people are focused on that. But you can't sit there and wait for the bigger picture to get resolved for you. You've got to adapt.
Yeah. So Daniel and Mike, do you want to elaborate a little bit on your own model and maybe your model from your competitors and also your kind of stakeholder in your business?
Yeah, so we're trying to adapt as quickly as we can. We just launched our venture capital fund managed out of Israel. We're looking at very interesting startups all over the world. We launched our innovation lab in San Francisco in collaboration with IDEO. We're building a lot of capabilities around human-centered innovation and digital. And as Noel was saying, some companies will survive, some companies won't survive. But I guess depending on the agility of the company and regardless of the agility of the company, it's very, very critical in the context of trade that there's transparency in terms of the rules of the game, there's shared rules of the game, and there's enforceable rules of the game. And we're seeing that there's some trade conditions in the global arena today where there's no transparency, the rules are not being shared, and there's no enforceability. And regardless of whether you're an agile company that can adapt or not, or can't adapt, you need those transparent, shareable, and enforceable rules globally.
Mike, your case?
There are 3 drivers, I would say, of change in our supply chains today, and really improvement in our supply chains. The first is the digitization that I've already talked a bit about. The second one we call disruptive technologies. So automation, 3D printing, a lot of technologies that enable you to do things that you could never do in your manufacturing operations, in your supply chains. And we are deploying that. That's a big investment for us, and our capital is something we call out as a priority. We see that as enabling us to deliver new levels of performance, greater efficiency. Those are trends that are going to be with us for some time and continue to impact our supply chains. The third one is sustainability. And it's long been a fundamental value for us as a company. We've 40 years about pollution prevention pays. It's the best thing to do is prevent it at the source. We're a manufacturer of materials, and our aspiration is to take our science and create a more circular economy, to dematerialize the world, if you will. And we have been working to implement that in our manufacturing operations for a long time. It's becoming a big driver of what we do. We have now 30% of our manufacturing plants around the world that are zero landfill waste, even though we're producing materials coming out the door. So being able to drive that sustainability into those operations, it goes into how you manufacture and reduce your footprint broadly. And it actually feeds into our innovation in our products. That sustainability driver is a trend that's just going to get stronger as we go forward.
Yeah, I think sustainability is an issue. It's a big issue here.
Sure. I just want to add one other comment. It's all too easy to get quite negative on the world that exists today, but we shouldn't lose sight of the fact that China is growing still at 6% GDP. Asia collectively, I think, is still growing at 4%. Business people collectively look at that as an immense opportunity.
And also Asia contributes to some 80 to 90% of your revenue
Sure.
overall.
So you can look at the world as glass half empty or glass half full. I still think there are many elements of the world there is still a huge opportunity, and businesses are focusing very much on that. And therefore, I do think Asia as a regional hub for supply chains will become even more important to be close to that consumer market that is emerging in Asia. In terms of sustainability, there's a huge amount of focus taking place at the moment on making sure all of your supply chain is able to meet the emerging requirements of sustainable supply chains and sustainable business operations. And that's working all the way back through the production plants, the refrigeration techniques, the warehousing, the logistics. And I think there's a huge focus from all businesses at the moment to try and look back through their supply chains and make sure that they can increase the sustainability of those supply chains in the future. Absolutely. And that will be a criteria that will be even more important as we go forward. And that's certainly coming through on the survey. 18% of the respondents basically said they're changing their supply chain for sustainability reasons. I think that 18% will only go up.
Yeah, so Daniel, you want to add something on the sustainability, global climate change?
So one of our most exciting businesses has to do with Precise Agro and AgTech. We acquired the largest drip irrigation company out of Israel last year. And we found out very early in the process that 70% of the world's water is used for agriculture. Only 7%, and Sandra mentioned that in a panel yesterday, only 7% is used in effective methods. So if we can decrease the use of water, again, agriculture uses 70% of the world's water, by 80%, and if we can increase the crop yields by 2x, 5x, 8x, which is what we're doing with our customers, we can fundamentally change the way the world feeds its people, and we can fundamentally change the way water is used in the world. So we're very excited about the prospects of that, and every single one of our businesses has sustainability and regen or circular at the core of what we're doing into the future.
Yeah, just like you have incorporated the sustainability into your company's mission, it's very good direction. So we have used up all the time. I think that we still have 5 minutes left. So I think it's time for us to wrap up. So very quickly, if you look at the future of the digitization, if you look at future of the 2050, why 2050? Because the scientists forecast and also expect that by 2050, the machine artificial intelligence will move from the narrow artificial intelligence to general artificial intelligence, which means that will exceed or at least be equal to the human intelligence. So if you look into this future, what is the thing that you want to see, and what is the thing you would rather not want to see on the future of global value chain?
I mean, the future is digitization is going to be part of the future, and everybody's going to, the world in 2050 is going to be so much smaller than the world of today. It's already become so much smaller than the world of 50 years ago, but it's the emergence of AI, digitization, bringing markets closer together and giving accessibility to not just the very largest businesses around the world, but the smallest businesses around the world.
Yeah.
I think it will be making an impact far before 2050, and we see it as an opportunity to continue to improve what we do in our manufacturing. When you look at it just in the impact on supply chain, it will make us more responsive. It'll get us closer to customers. It'll enable us to do things that we can't do at the level we do them, that we'll do them in the future. Can't do today what we will be able to do in the future with AI.
Yeah, so Daniel, anything you would rather not to see?
No, I prefer to see positive things, and we see a huge opportunity moving forward in terms of what we see as intelligent urbanization and intelligent ruralization moving forward, and how that can fundamentally change the way we run companies and the way we see things into the future, and see a more livable, lovable planet for our children and our grandchildren. Looking forward to that.
So we are a very positive panel. Please join me with a big applaud for thanking our great panel, and thank you very much.